Welcome to today's video, where we'll discuss a topic that's on the minds of many investors: retiring on dividends. Whether you're just starting your investment journey or you're nearing retirement age, dividends can be a crucial component of your retirement strategy. So, let's dive in. First, let's understand what dividends are. Simply put, dividends are payments made by a company to its shareholders. They represent a portion of the company's profits and are typically distributed quarterly or annually. Dividends can be in the form of cash or additional shares of stock, known as dividend reinvestment plans, DRIPs. They're often seen as a reliable source of income for investors, especially during retirement. So, why consider retiring on dividends? Well, for one, dividends provide a steady stream of income, which can be particularly attractive during retirement when you're no longer earning a regular paycheck. Additionally, dividend-paying stocks have historically outperformed non-dividend-paying stocks, providing investors with the potential for both income and capital appreciation. Now let's talk about how to build a dividend portfolio for retirement. The key is diversification. You'll want to invest in a mix of dividend-paying stocks across different sectors to reduce risk. When selecting dividend stocks, it's important to consider both the dividend yield, which is the annual dividend payment divided by the stock price, and the dividend growth rate, which measures how much the dividend has increased over time. One popular strategy is to invest in dividend aristocrats and dividend kings. These are companies that have a long history of consistently increasing their dividends year after year. By focusing on companies with a proven track record of dividend growth, you can build a portfolio that generates reliable income for years to come. Another way to maximize the power of dividends is through dividend reinvestment. Instead of taking your dividends as cash, you can reinvest them back into the same stock or into new dividend-paying stocks, allowing your investment to grow over time. This can significantly accelerate the growth of your portfolio, especially when combined with the power of compounding. Of course, it's important to consider the tax implications of dividend investing. In many cases, qualified dividends are taxed at a lower rate than ordinary income, making them an attractive option for retirees. However, it's always a good idea to consult with a tax advisor to understand how dividends will impact your overall tax situation. Finally, let's touch on the risks of dividend investing. While dividends can provide a steady stream of income, they're not guaranteed. Companies can reduce or eliminate their dividends if they experience financial difficulties. To mitigate this risk, it's important to thoroughly research companies before investing and to diversify your portfolio across different sectors and industries. Now that we've covered the fundamentals of retiring on dividends, let's address some common questions from our viewers. Our first question comes from Sarah, who asks, how do I determine if a company is likely to continue paying dividends in the future? Sarah, great question. When assessing a company's ability to maintain its dividend payments, it's important to look at factors such as the company's earnings, growth, cash flow, and payout ratio. A sustainable payout ratio, which measures the proportion of earnings paid out as dividends, is a key indicator of whether a company can afford to continue its dividend payments in the long term. Generally, a lower payout ratio indicates that a company has more room to grow its dividend or weather any financial challenges. Our next question comes from James, who asks, are international dividend stocks a good addition to a retirement portfolio? James, international dividend stocks can be a valuable addition to a retirement portfolio, as they provide exposure to different markets and currencies, which can help mitigate risk. However, it's important to carefully research international companies and consider factors such as political stability, economic conditions, and currency risk. Lastly, let's address a question from David, who asks, how should I adjust my dividend portfolio during market downturns? David, during market downturns, it's natural to feel concerned about your dividend portfolio. However, it's important to stay focused on your long-term investment goals and avoid making impulsive decisions. One strategy is to continue reinvesting dividends and taking advantage of lower stock prices to buy high-quality, dividend-paying stocks at a discount. Thank you to everyone who submitted questions. I hope this extended discussion has provided valuable insights into retiring on dividends. Remember, investing for retirement is a journey, and it's important to stay informed and adaptable along the way. Until next time, happy investing.